Hey everyone, just wanted to get some context as to what is happening in the market today. I hope that you all are doing well. I know that some of you took some big losses. If you've followed a lot of the people that I follow, the people that I brought on the channel, they've spoke about a lot of this stuff, and I've spoken a lot about it. So I hope that you all were able to be prepared. But I know that sometimes it's easy to fall into the hype of a lot of things, and the chickens come home to roost. Every time in history has showed us that so much. And so I just wanted to give a little more context to the market today because we saw a lot of these stocks plummet. So I've done a video about 2 weeks ago, and I laid out just kind of what I expected for the year. I expected there to be a market correction as the Fed tapered. The Fed did this back in 2018. The market threw a big tantrum, and the Fed hasn't even started quantitative tightening yet. They haven't started even tapering or reducing their balance sheet. So this is just them stopping buying the bonds and stopping pumping so much money in the market by buying the U.S. bonds. So we're seeing that the market is reacting to that, and so I just want to say, excuse me, y'all joining me in my closet because my daughter, she'll find me and she'll interrupt this whole live video. But so that's pretty much what's happening today. And I mentioned how when the Fed tapered, this kind of happened in this happened in 2018. The Fed started tapering. The stocks took a major haircut, and then now we're seeing it today. Also, another thing is that when the Fed tapers, interest rates begin to rise. So a lot of banks run into U.S. Treasuries, bonds, things of that nature, because those are the safe havens. So whenever I looked at my portfolio today, the bonds were actually up. So I have bond ETFs because I sell them whenever the market's going down, and I have some dry powder to be able to buy some of the dips or whatnot. Right now, I'm being a little more careful, but I'll share kind of what I'm doing in regards to that. So the Fed started tightening, and this was a major haircut for the market, especially the growth stocks. We saw a lot of the stocks just plummet. We saw, even since November, the Fed has been announcing this for a while. Stocks like Netflix went down from like 700 at the high, and now it's at 300 or something dollars. Shopify has like a 50% haircut. It was at 1,600, now it's at 800. Adobe dropped 300 bucks. A lot of these stocks have been just getting killed. Even MicroStrategy, its high was $1,000. It's at 300 or something dollars now. So these growth stocks have been just priced in. The growth was priced in. Everyone came into when COVID first happened, the shutdowns happened. A lot of these stocks, people just piled into, and they got the growth out of it. These stocks aren't growing anymore because the Fed is tightening, and now there's going to be a rotation into value stocks. There has been a rotation in the value stocks. We've seen oil and a lot of the commodities going up and standing strong. So my portfolio was down on the day, even though my portfolio is pretty well constructed. It was down, but it wasn't down as much as some people I know. And one of those people being a family member. And so, I was talking to my family member. I was like, hey man, my portfolio's down 650 bucks today. I think it did okay for, these 1-2 punches. These are like punches from Mike Tyson, but this is my portfolio was like Lennox Lewis, being able to withstand some of those punches. My cousin was like, man, I don't even want to hear that. He was like, man, my portfolio's down 7,000 today. This isn't a lot of money to some people, but it's quite a bit to us, because we just on this wealth building journey and everything. So, that was just alarming. It's just like, wow, like, and he said, I fell into my bias, and I've been telling him this for like months, just telling him like, hey, like these stocks are overvalued. These stocks are, they're just people speculating. There's people just going in there and speculating and stuff. Even in a lot of the cryptos, the altcoins, like I don't mess with coins like Shiba Inu and stuff like that. Altcoins been taking a hit. Bitcoin, it took a hit, but it's not getting as hit as hard as a lot of these altcoins. So the biggest thing that I wanted to say is that this was going to happen. It's going to continue to happen until the Fed reverses course. If they reverse course and they see that the market is reacting this way, well, they're going to see that the market's reacting this way. They're going to reverse course and they're going to start money printing again. I mean, they're in a tough spot. They can't let interest rates raise too high because the government could default on the debt, and that's not good at all. But then they can't, let inflation run too high because then it affects the economy. And then now, that they're tapering, people's retirement portfolios are getting slammered, hammered, and everything, sludge hammered, and they're gonna have to reverse course at some point. They're in a tough spot. They can't let interest rates raise too high, and they can't let the market just plummet like that. And they also can't let inflation just continue to eat our pockets. The average person. This stuff leads to like revolts and revolutions and protests and all types of things. Like this stuff is serious. I believe it was happening in Kazakhstan. Kazakhstan had some energy crisis and things going on, and people hit the streets and were just like, "Hey, the energy is too expensive," and they started getting violent. So this is definitely serious, and the Fed is in a tough spot because of bad fiscal and monetary policy that has been happening for years. And so now we're here at this point. And so how I'm taking this is that I believe that the market will bounce back at some point. However, you don't want to catch a falling knife. You catch a falling knife, you cut your fingers off, right? So we don't know where the bottom is with this market. We don't know, how far it's going to go down or what. So some things that I'm doing is I am dollar cost averaging into some of these stocks. I'm looking at some of the growth names and I'm like, okay, this is cheap. This is cheap. And I am just putting a little money in here and there, $20, $30, $100, just putting it in, just sprinkling it in. I'm not finna go in and just buy shares because we don't know how far this is gonna go. A lot of these stocks haven't even bottomed yet. So you don't wanna just go and buy shares and then your average is way higher than what it bottoms out at. So just average your money in if you're gonna get into some of these stocks because it's cheap. And this is also a psychological thing. Because when we want to buy when it's green. Right now it's red. It's blood in the streets. This is when you're supposed to buy. And it can be hard, but I'm doing it myself, and I'm just like, okay, well, I'm in it for the long haul in a lot of these companies, and I feel like, I'm just going to go in and buy. One thing that did hold up, that a lot of people didn't really think. Let me see if I can find some. Hold up. Let me find something. Okay, this is one. All right. One thing that did hold up, a couple things held up: bonds and the dollars. Right. I mean, obviously, dollars getting eaten by inflation, but the dollars are what you need right now to buy, some of these equities cheap. A lot of people, stimulus ain't coming. Stimulus pumped a lot of money into the market. Stimulus has stopped. It's not coming, and a lot of these people lost money. And how are they going to come back and buy, when they don't have the money to buy it? So that's why a lot of people, since that I've watched since November went into all cash, and I didn't go into all cash, but I was also not into overvalued stocks. And I had some bonds on the side and I had a little bit of cash. So I'm doing okay. So this held up. Precious metals. If you look at gold for today, gold is only down $3 on the day. Silver is only down a few cents. I mean, and it just keeps going up. This has stood the test of time. This is silver, right? So this has stood the test of time, and it held up. It was a safe haven for sure today. Bitcoin got hit. And I believe in the technology of Bitcoin and everything, and I play it as a speculation, just like, okay, well, let's see what it do. I do believe there's some good utility to it, especially, me having Some friends that live in other countries where, like the Philippines, where I'm able to send them money without having to go through MoneyGram or whatnot, or Western Union, and have them take 10% of the money I send them. So Bitcoin has utility. It helps a lot of people in foreign countries and third world countries that don't have access to banks, all those different things. So it definitely helps them, especially if they come over here and they're working and they're trying to send money back to their family. So Bitcoin has some utility, and I believe that I'm still bullish on it long term. However, it plummeted today. It plummeted. Well, not Bitcoin itself. I mean, this went down, but the other cryptos, altcoins. So I've been buying into them too. Some of the companies I'm looking at, some of these cryptocurrencies I'm looking at, and just some of the utilities like Aave, for example. I love Aave, just kind of what they're doing. They're trying to make a decentralized social media network because people getting deplatformed and everything, and you could take your social media profile with you to other decentralized social media networks. So it's pretty tight. So coins like that I'm buying up. I'm just like averaging in. Okay, let me buy a little bit here, a little bit there. However, the metals held up. I have most of my money is in metals. I have like a good, I would say 60% of my money's in metals, and they're holding up, and I expect them to hold up. I expect them to store value. I expect them to hold up to the test of time like it has for 5,000 years. So, I just want to share that with you all. I hope that you all are able to take advantage of some of these opportunities that are coming in the market. Some of the companies I'm looking at, MicroStrategy, to get plummeted. I'm buying some of that. Uh, Other companies, Roku, Arcade, ETF. I'm looking at Adobe, Netflix. I may average in a little bit of that. Amazon took a big hit. I may average in a little bit of that. But I'm also just kind of just taking my time and just looking at like, okay, let me just average in, and these things happen in cycles. So value stocks have been getting beat down for the last decade, I would say. I mean, along with a lot of the commodities. And this happens in cycles. There's cycles for growth names, and there's cycles for value names. The last cycle for, we had growth in the dot-com bubble, when a lot of those internet stocks went up. And then we had the emerging markets and value. Then we had growth again after the 2008 crisis. Then we had I think we had a little bit of value, and then we had growth again for a while. So value has been getting hammered for a long time, and now it's making a comeback. People are running into dividends paying stocks, and the stocks are holding up pretty well. I mean, if you think of, you know, um, my portfolio versus my family members, I have more money in my portfolio than my family member has. And my portfolio is only down $650 today. His is down 7,000. So just want to give that context to you all. So I want to thank you all for joining me today. Appreciate you, Zach. We got to catch up here soon. So let's do that. All right. Talk to you all soon.